Hi, welcome back to the Leadership Help Desk, where we're just trying to make a few extra bucks, some passive income via dividend stocks. It's a wonderful feeling to have stocks that are paying you all the time, and you basically make money while you sleep. About in 2013, I got a couple of bucks, and I sat on it for 2 years and studied dividend investing. I just kind of fell in love with it. There's other ways to invest, all growth, but I kind of like the idea of the stocks paying me while I sleep. So if you're a beginner, this is a great video for you, as I'll explain what I was looking for, what I learned over those 2 years. Since we're in the dividend game, we need stocks that pay dividends. And in my case, I was looking for stocks that were paying 5% to 6%. Now, yeah, some would be maybe 4.5 to 4.75%. That would be acceptable. Some stocks that I picked are now paying over 6%, in the 7% range. Anything over 8 gets really risky, in my opinion. So we want to pick a portfolio of stocks that pay, let's say, an average. When you calculate all of them together, try to get 5%. We also want solid companies and top brands that have been around for a long time, and they're household names. They have a share of the mind of the consumer. AT&T, McDonald's, Walmart. Not all of these pay 5%. Some of the oil stocks, Chevron, and things like that. We want solid companies that we think will still be around in 20 to 30 years. Now, things go wrong. There are disruptors such as Amazon, and some of the top brands, something happens and they get damaged. Kraft Heinz, what's wrong with them? Well, there were some financial problems. You look at Chipotle, not a dividend player. I'm just talking about top brands that get damaged. They had food poisoning issues. Many of us from back in the day would have thought Sears and JCPenney would still be thriving, but they're not. Things go wrong. Also, think about what people will not go without. Will people go without Walmart? Will people go without Coke? Are people going to stop shaving? Probably not. Are people going to give up their Big Mac? Probably not. Are they going to give up their phone? Probably not. So those are some things we can look at. Now you could also look briefly at the PE ratio, which is the ratio of price divided by earnings, and see if we can get a stock that's lower than 25. Now this varies by industry, and once you start looking for these things, you will see that companies, when prices go high, then the ratio goes higher. So somewhere in the range of 15 to 25, I think, would be something I would be interested in. Will I go higher than that? Yeah, I will. But you need to be cognizant of the price-earnings ratio. Nothing under $10 per share. Now, I'm breaking that rule with Ford right now, and I'm probably going to be sorry. But there's a term called penny stocks, and now I have heard, and it makes sense to me, that anything under $5 is a penny stock. Now you think about it. Why is a stock at $5 or $8, $10? Well, they're getting punished by the market. There's a reason, and you need to be looking. If you're going to pick a dividend stock that's under $10, you need to know why it's under $10. Now, another thing you can do, and this is easy. You just type in the ticker symbol and stock, or the name of the company and stock, And on Google, the first little thing should be a box that pops up, and you can click on 5-day, 1 month, maybe 6 month, 1 year and 5 year and max charts. You don't want a chart that's just going down, and you don't want one that's working its way down. We want one that just looks like an avalanche coming up, right? That looks powerful. We might see one that's going up and then down. Maybe something happened. Maybe it was the economy. Maybe it's not even the stock's fault that it went down. It's just kind of like this virus we have, and it pulled everybody down. Nobody's going to stop using the phone because of a virus. And it's starting to go back up. Or it could be choppy, but still an upward trend. Now, when I say that, we look at the 52-week high and the 52-week low. We don't want to buy normally at the high, right? The high of 52 weeks. Would you want to buy there, or would you want to buy like right here? And if it's like this, man, that's risky too. Really? Is it going to turn back up, or is it going to keep going down? So we need to be aware of the 52-week high and low and why the stock is where it is. So if you click through these, you'll get a feel for the longevity of the stock and what it's done. Some of them are really impressive. They just keep going up. And then some of them are seasonal. So we have that. Now, will there be any disruptors? That's a great question. I own AT&T stock. I own Verizon stock. Those are phone companies. But what's up with the WhatsApp? Everybody's going to have free phone, or everybody has to have data? What's going to happen with that? You'll see that these companies are actually diversifying into other areas just to protect themselves. What other disruptors are there? Oh, Amazon disrupted bricks and mortar. How far is that going to go? Also, we need to look at a market cap of at least 25 billion. I think I can say that. 25 billion. That should be a good, solid company that people feel has a lot of value. And, we're up to $1 trillion now, so the 25 billion might be a little bit low, actually. Now, you're going to be tempted to look at articles and read articles, because you're going to look up, should I buy such and such stock? And then the articles are going to come up. All these gurus, all these pundits that think that they know the answer, they figured it out, they think the stock is going to go higher. Now's the time to buy. Now's the time to sell. Is it a good time to buy? Here are the reasons why you should buy. Well, as soon as once you've been around the block a few times, as soon as those articles come out, and if you're like me and waiting 2 years to buy something, you will notice that the day after the article says, this is the time to buy, the whole thing crashes. Or you should sell, and whoop, off it goes. I don't know who's writing all of these articles, but are they just cranking out crap to make money? Are they really interested? Do they really know anything? Or were they just told to write an article on such and such a stock, so they had to take a little bit of information, write an article, and go one way or the other? Now, my buddies over at CNBC, you need to spend some time watching CNBC. At CNBC, you learn the jargon, and you start to see how other people think about stocks, and you hear words like PE ratio, disruptors, what's the dividend yield? In fact, they just say yield. What's going on? But they're not God, right? It's just CNBC. They're talking about stocks all day. They have to have something to say. They have to have an opinion, and those opinions can be wrong. Even if you're talking to the masters of dividend investing or stock investing, they can't predict what's going to happen. Nobody can predict a virus or whatnot, economic downturn. Very difficult. Now we look at payout ratios below 50%. This is the ratio of the amount that the stock pays in dividends versus how much it makes. So if they pay out 100% of their dividends, that would be 100% of their earnings go to the dividend, then that would be very risky because they might have to lower the dividend. And we don't want stocks that lower dividends. We want stocks that raise dividends. Now, if you need to read articles on Buffett, who's not perfect. He's good, but he's not perfect. And Buffett will say, buy what you know. That's difficult because I know what a Big Mac is, but I don't know the burger industry. I don't know the oil industry. I don't know the utility industry, the telecom industry. That's a full-time job just to know one of those things. But his point really is, do you like the product? You like Gillette? Buy Gillette. If people around you are drinking Pepsi instead of Coke, maybe you should consider buying Pepsi. Now we have the aristocrats. And I should do a video on the aristocrats. These are the dividend stocks that pay consistently over many, many years, and they always raise their dividend each year. Now there's two things going on here. There's companies that raise their dividend every year, so you get a raise. You didn't get a raise at work, but you get a raise at home with your stock. They raise the dividend every year, and they've been doing this for many, many years. Oftentimes, those are the stocks that also have a lower dividend because people want that. And another concept is some companies only raise it just a fraction of a penny, so they can get credit. Other companies might raise their dividend 15%. So that's another thing to look at. Dividend growth. Companies that raise their dividends every year. So those are some things. Actually, I have a note up here that the payout ratio, maybe 50% is a bit high. Here again, it depends on the industry, but maybe 30% would be better because they only pay out 30% of their earnings in dividends, which means they could raise that dividend. They've got a lot of cash. They're not spending all their cash on the dividend. So I hope that helps with a little overview of dividend investing. There's a lot more to talk about. You got to go. One thing you could do is build a portfolio, put it on an Excel sheet. Let's say you pretend like you have 10,000 or 50,000, and you pretend and you go, I'm going to try all of these things and more. Other people have other ideas, and I'm going to pick out the stocks that I would buy, say 10, because we want to be diversified, 10 different industries or 5 different industries, and say how many shares you're going to buy, how much is that going to cost you. You could even have a sell for PE ratio, 52-week high and low, and start mapping all this out, and then just pretend like you're investing, and then you'll see which stocks lose and which stocks win. Now, just because a stock goes down doesn't mean you have to sell it. You haven't lost any money until you sell it. Stocks do. They do this, and hopefully they go up. Now, another thing I'd like to say about dividend investing is that I built my portfolio. There's a video right next to this one on my portfolio that I built in 2015. But that portfolio, it's paying about $1,400 a year, and the investment was $25,000, and that $25,000 has grown to $33,000 up until last week when the crash occurred. And I'm not really worried about how much my balance is. I'm worried about the dividends, right? Because the stock portfolio is going to lose value. It's going to gain value. So I don't really care about the 33,000 that I might have just lost 4,000 on. I know that sounds weird, but I care about that $1,400 because that's my retirement payments that I'll be getting, and I'm hoping to grow that. There will be some growth coming down, but the dividends, as long as the dividends don't change, everything for me basically stays the same. I hope that makes sense. Another thing I'd like to say is I bought in my portfolio, say 15 or 20 stocks, and I felt like I really need to have some Apple. So I bought 10 shares of Apple, and those shares cost $115 a piece. And I'm going, Maurice, you're buying on the high. What are you doing? That's crazy. Don't do that. And I said, well, it's good for my kids, right? You know, I'll leave it to them. And in 30 years, who knows how much that'll be worth. So I only spent $1,100 on Apple, and I spent the rest on pure dividend stocks. Again, my account was $25,000, and to this day, it's like at $33,000. But Apple tripled in value. I'm pretty sure it went up to $330, $345, something like that. And if I had only bought Apple, who has a low dividend yield, my account would be worth $75,000. So you got to consider that too. Is dividend the only thing that you're after, or do you want some growth? Now, I've got mutual funds that have all the growth stuff, so I'm not too worried about it. But that is something to think about. Well, I hope you enjoyed this. I'm going to lay out my portfolio probably next week. And if you're interested in seeing that, then subscribe and click the like button, please. Thank you, and I hope you learned something. Have a good day.